morning or afternoon, evening, wherever you are, from this cold tundra of Northern Virginia.
It is a bit chilly out here.
Freezing and full of snow, and it's time to go.
It's January. I mean, it's,
I don't care. We saw it. It was pretty.
Yeah.
Every day after the first snow is miserable. It's like, okay, it was pretty yesterday. You know, it's my buddy down in North Carolina. He's been saying this for years, so it's not new, but snow is something nobody wants. Out of that, you can spell snow. Yeah. And I'm like, I don't know if nobody wants it, but I know I don't.
Know. Dude, if you're a hardy Boston guy, you like the snow up there. Of course, you anticipate it in the summer. Everyone's all excited in the summer for the snow, and then by the time, January rolls around, everybody's griping about snow, and then...
I like it, on vacation or something. I don't know. Like, I like snow. I don't dislike snow. I don't like snow when I got stuff to do.
Yeah, well...
it
does interfere with things you get to do.
I'm not a kid anymore. I'm not sledding. I'm not in the backyard on a sled. My kids are, but... All right,
Anywho,
man. What you got?
It's been quite the week. I think this is the third week in a row, third 4-day week for the market, right? Christmas, then New Year's, then Carter's memorial. And so, yeah, I don't think we have any more holidays for a minute, but...
Martin Luther King's coming up.
Is that next week?
I don't know. I think
it's
pretty
soon. January 2. Yeah, it was got to be next week. I mean, holy moly.
Yeah.
And I'm not a huge fan of these 4-day weeks. They haven't been very good to the market here. This is a crazy week. Like Monday, last Friday, if you think all the way back to last Friday, which is like a long time ago, it feels like, but it was actually an up day. And then Monday, Bitcoin was up 4%, Nvidia was up 4%. All the Magnificent Sevens were way up. It was a big breakout on Monday, and then everything completely unraveled on Tuesday and Wednesday. I can't remember if I have a chart of Nvidia on the podcast or the newsletter, but Nvidia is like the best example. I mean, it was absolutely breaking out of a really good kind of 45-degree consolidation down, broke out last Friday. And then gapped up on Monday and kept on going. But then Tuesday, Wednesday, holy moly, just completely fell over.
And you wouldn't have been able to convince me. Again, this is gambling mentality. I don't know if it's a gambling mentality, but definitely fundamental, kind of stuff, not technical analysis, where, the CES was going on. They're announcing all this new stuff.
CES, computer.
CES, yeah. The Computer Electronics Show, which is the largest electronics show in the world. Happens this period of time, and that's when everybody comes out and announces their stuff. And usually in these kind of times, because they are announcing new things, like their stuff skyrockets.
Yeah. And
there's some companies that aren't announcing anything. So you would think Nvidia just announced some pretty cool stuff, and you're
a $3,000 computer that like us normal people are going to be able to buy if we want to.
Yeah, and it's
it was a big announcement, I thought.
Yeah, and it's gaming centric, so you got to be like, I would have no interest in that $3,000 computer, but I don't play games. But for people that do, and it's a huge, streaming has just gone off it's in the stratosphere now. The amount of money people are making streaming while playing a video game. Mm-hmm. I'm too old to understand that, and I grew up with video games. We all did, but I really never got into them. But I don't question it. It is what it is. They're making money. I mean, there's guys like T-Pain. He's a rapper that came up through when we're he makes more money on Twitch than he does in his music. It's crazy playing video games. But anyway, I digress. Point being, yes, big announcements. Normally, that is associated with a little bit of a bump, and then maybe it comes back to normal. And that's what a lot of people were expecting, and that didn't happen. And earnings seem to be coming in, at least on target for Nvidia. I mean, again, stuff like Nvidia, if you're looking at their chart, like let's say the last 6 months, it gives you one picture. If you just pull back to 2022,
sure, you
go, okay, because it's literally like straight up.
Yeah,
it says 22, particularly on a weekly basis. So yeah, everything's about perspective for all these things, particularly. But you see something like Nvidia, and you think, well, this is when it should be going up, or at least holding strong. And then of course that was really, if I recall right, one of the few in the Magnificent Seven that was actually still kind of grinding up. Everything else was sort of kind of going flat and down.
Yep.
And so it was holding it up. And
Yep.
now it's not.
Yeah.
And you can see that in the rest of the market. It's amazing how, what's our guy, Taggart?
Adam Taggart.
Adam Taggart put out a little meme that shows like the world of equities, and then like on top of it is an elephant.
Yeah.
And then on the bottom of it is two ants, and the two ants holding up the
up the
world
thing.
and the
Yeah.
elephant
Yeah.
is the Magnificent Seven.
Yeah. So I'm not going to be able to remember the exact numbers, and I didn't see the meme that you're talking about, but a lot of people.
I think it just came out this morning.
Yeah, a lot of people have been talking about this problem, and so I'm not going to get the percentages right, but something like 40% of the S&P 500 is made up of the Magnificent Seven. And something like 70% of the market cap of the world stock market, 70% is the U.S. So in reality, those two little ants, like on the meme that you're talking about, those 10 ants,
That's what the
are
other
holding
thing.
up the entire world of trillions and trillions of dollars.
Yeah. That's what the other part of the meme was the world equity market, and it was U.S. equities, and it was the ants.
Yeah.
That's what it was.
Yeah, it's really, I mean, most of the time people don't think about anything that's happening outside the U.S., and ever since 2008, if not before, everything is very, very interconnected, especially the banks in general, but the central banks. And so if as rates keep going up, if the stock market rolls over in the U.S., the rest of the world's in trouble, and they're in trouble already anyway. So we shall see. But at any rate, TSP Weekly Podcast, 12 January 2025. So we'll take a look at what happened this week from the economic news headlines, and then I got a really good email that came out on Wednesday. So it's not through Friday, and this is one of the rare times we're actually recording on Saturday. So you guys are going to get the charts through the whole week. But this email came out from JC Pretz on Wednesday. So it's not that old, a couple days. A prerequisite for a correction. So what are the things that we need to see for a correction to actually happen? Head and shoulders topping pattern, one of the most well-known patterns in technical analysis, and one of the most accurate. When it actually executes, it rarely is a fake breakout. We shall see. But it's pretty important right now. Bonus chart Bitcoin, which you will see why when we get there, and TSP fund charts.
And before we get into all that, I did want to take a second to give a shout out to our buddy who is retiring after it's almost 30 years. I don't know. He's younger than us, but he started when he was like 13 or something in the Border Patrol. But Border Patrol guy, and then he went on to Homeland Security Investigations. He's retiring. And not only a very good friend of ours, but he's also been with Grow My TSP since the beginning. Yep. Kind of sitting on the sidelines, but always been a part of it, and a huge supporter. And so we wanted to give him a shout out. He's retiring down in Alabama. And actually, the reason why we're doing this on Saturday, we weren't even supposed to be here. Yeah. This knucklehead here, got caught the norovirus, and I just want to say publicly, I do not recommend it.
Yeah, I imagine not.
It was a horrible experience, and it would have been irresponsible to travel, so we didn't. And so we're actually doing it a little later. We would have been doing this earlier in the week. But anyway, I just want to take an opportunity to give him a shout out. I know he actually watches the podcast. He'll probably be a little bit hungover after his retirement party. But
it's all right. You'll give him something to do on Sunday night.
Big shout out, Barry. And anybody else that's retiring right about now.
Yep.
Because a lot of people do.
It's a good time to retire. It's
right after the first
January.
of the year.
Yep.
So if you're retiring right now, cheers.
Yep, absolutely.
All right. Back to the game.
All right, back to the game. So Monday, we get S&P Global Composite PMI, which there's basically, when they break the economy down, it's two halves. They call it the services side and the manufacturing side. And the composite is the combination of the two. So there's a couple different companies that do that data analysis. One of them is S&P, and it came in at 55.4 versus 54.9 last month. Anything above 50 means the economy is expanding, right? So that's a good thing. 55.4 up from 54.9. So the economy is expanding. It's been expanding through most of 2024. This is kind of what it's looked like. This is the composite PMI, and we're pretty well above 50. I don't know if April was below 50, but I don't think so. I mean, I think we've been, since 23 on the composite anyway, pretty much steadily heading higher. So the economy from this metric is getting stronger, right? S&P was up on Monday 0.58%. On Tuesday, a different company, ISM Services, or ISM as opposed to S&P, did the services PMI. Okay, so it's the services half of the composite, and it came in at 54.1 versus 52.1 last month. So again, the services sector of the economy is expanding, right? On not necessarily because of that, but on Tuesday, S&P was down 1.13%. On Wednesday, we get the MBA 30-year mortgage rate up to 6.99%, which is definitely going to go higher next week from 6.97% last week. And no surprise, mortgage applications fell 3.7% this week, even after falling 12.6% last week. So mortgage rates are going up. Yield spiked big time this week, so that 6.99 number is definitely going to be over 7% next week. So people looking for houses are hurting, and the price of housing still isn't coming down. Initial jobless claims were 201,000 versus 211,000 last week and 213,000 forecast. So fewer people by a pretty good margin claiming new unemployment claims. And employment is still pretty strong, right? S&P was up 0.16%. Thursday, the markets are closed for the passing of President Carter. Friday was a huge job number. It was a really big, really important number on Friday. Unemployment fell from 4.2% to 4.1%. So unemployment, the 10-year yield, and the dollar are going to be the three most important things for 2025. The unemployment rate falling is a good thing in the big scheme of things, because we're looking for the unemployment rate to accelerate to the upside, which will trigger, if not coincide with a significant stock decline, is one argument. So for the unemployment rate to fall from 4.2 to 4.1 should be looked at as a positive. Non-farm payrolls added 256,000 new jobs, okay, versus 212,000 last year. So that's a pretty big percentage increase of new jobs added, and the forecast was for 200,000. So we had way more people getting on the payrolls than we did last week. So the economy is getting stronger. Unemployment is falling. Services PMI is good. Composite PMI is good. S&P falls 1.54% on Friday. Why is there a disconnect between what looks like the economy getting better and the stock market rolling over? The problem on Friday was that if unemployment falls and there are new jobs being added, it's inflationary. And it's really hard for the Fed to continue to try to cut rates if inflation is staying steady or moving higher. So the fear of, if the economy is too strong, the Fed is supposed to be raising rates to cool the economy down. It's when the economy is getting weak that the Fed can lower rates. And that's not the environment that we're in. That's why the bond market is pushing rates higher. That's why the 30-year mortgage rate is going up instead of down, even though the Fed is cutting rates. So all that to say, if you wanted to say why did the market fall on Friday, it's because interest rates spiked. The 10-year yield spiked on Friday. Okay. A prerequisite for correction. So again, this came out on Wednesday. It was before Friday's big down day. And it is from our buddy JC Peretz at allstarcharts.com. You definitely want to get on his email list if you're not already on there. But this is all a quote from his email. So here's one thing we know for a fact about the market. In order to have a bear market or a correction of any kind, you need the prices of stocks to be falling. Fact. I would have to agree with that. Without the prices of stocks falling, you cannot possibly have a bear market or any kind of correction at all. That's just how the math works. If one would take the time to count how many stocks are actually going down in price, one would have a better understanding as to whether or not stocks are correcting. See how that works? He's kind of obnoxious, but that's the way it goes. And while the list of new 52-week lows is still non-existent, that doesn't mean stock prices aren't falling. We want to look at shorter-term time horizons to see if we're seeing an increase in the number of stocks falling in price. Currently, we are not seeing any expansion at all in the number of stocks whose prices are falling. Here are large caps, mid caps, and small caps, all within the same range of new lows that they've been throughout this bull market. So this is the chart he's talking about, okay? This is a weekly chart. I'm pretty sure it's a weekly chart. It's not on the, doesn't say it on there, but I'm pretty sure it's a weekly chart of the S&P 500, right? And here's the bottom from COVID, okay? So this is the percentage of stocks in the S&P at 1 month lows. This is the whole S&P as the index, okay? This is the percentage of S&P 400, okay, which are like mid-cap stocks. So S&P 500 you would say is like the large cap. It's the whole index. S&P 400 is like the mid-caps, and S&P 600 is like the small caps. So we kind of broke it down so you'd have a little bit of an understanding of within the S&P how things are. When you look at, so it's the percentage of stocks at 1 month lows. And you can see when we hit these significant bottoms, we have stocks, right, at highs. These are where the spikes are when we hit these big bottoms, okay? And what he's saying is we're down here at 17.7, right? We're not up here at 60. So there is no expansion happening of the stocks at 1 month lows. Right, so you would expect to see at the beginning of if we're going to have a significant downturn, this is going to be the first ones. The 1 month lows are going to be up here, and then eventually we're going to see 3 month lows up here, and then 6 month lows up here as the market continues lower. Right, so he kind of talks about that in this one. We'll know if we're in a correction. You'll be able to just count and see for yourself. And you'll see the list of new 1 month lows expanding, new 3 month lows expanding, and then 6 month lows, right? Before you ultimately see the big surges in new 12 month lows. It's a process, not a single event. You'll see breadth deterioration, and then well after the fact, they'll announce that stocks are in what gossip columnists call correction territory. The worst offenders wait even longer and then proclaim that stocks are in a bear market territory. These are all made up fairy tales about arbitrary numbers without any statistical significance whatsoever. It just gives the gossip columnists something to gossip about. Whether an index is down 10, 20, or 9, or 10%, 20%, 9%, 20.5%, doesn't matter. It's what the components underneath the surface are doing. We know we've actually taken the time to look. I would encourage you to do the same. His emails are pretty straightforward, but you can't really argue with what he's talking about. To have a sustained correction, it's not going to come from just Nvidia tanking. It's going to come from an increase in all the stocks within the S&P 500, giving us new or spiking in 1 month lows and then 3 month lows and then 6 month lows as the market continues down. And what he's saying here, as of Wednesday, we don't have anything near a spike in the shortest time frame, the 1 month. So could that change? Yes, absolutely. Could have begun on Friday, but as of Wednesday, we're still in pretty good shape. All right, that's as bullish as we're going to get on this. Head and shoulders topping pattern. So we've done this a while ago, but we'll do it again just for, this is like the basic class on a head and shoulders topping pattern, right? It's from Investopedia. It's a chart formation that appears as a baseline with 3 peaks, where the outside 2 are close in height and the middle is the highest. Okay. So understanding head and shoulders pattern has 4 components. After a long bullish trend, okay, so you start off by, you're going up for a while. You're in a bullish trend. Price rises to a peak and subsequently declines to form a trough. Okay, that's going to be the left shoulder. Price rises again to form a second high substantially above the initial peak and then declines again. That's going to be the head. The third one, price rises a third time, but only to the first peak level, right? It doesn't put in new highs. It only gets as high as the left shoulder before declining again. So that's going to be the right shoulder. And then the neckline is drawn at the two troughs or peaks. So this is the, textbook example of a head and shoulders. You got a big bull market happening, and you come to a peak. The market pulls back. No problem. Finds support somewhere, starts going higher. Now you get new highs, right? That's the head. You don't know that at the time. You're watching it, right? It rolls over and comes down to basically the same level as the prior low. Now it's on your radar potentially. Well, as soon as it breaks back up from there a little bit, now it's on your radar as a potential head and shoulders. Because you got a high, a higher high, and the two points where you could connect and make a neckline. And now you're watching to see if the next rally is about the same as the left shoulder, and then it rolls over. If it does that, now we're down here. Now you're really looking at a head and shoulders pattern, a potential head and shoulders, right? You got the left shoulder, the head, the right shoulder, and you're down here, and you're watching price come down, and this is the neckline, right? If it breaks through this neckline, it keeps going down, okay? And the textbook answer to how far does the market go down, or the stock, or the whatever you're looking at that you're doing the chart of here, the textbook answer is from the neckline to the top of the head, whatever that distance is, okay? If price breaks down through the neckline on the downside, you take this distance and just move it over here, okay? So whatever this length of this is, it's the same length down to here as a minimum, okay? So head and shoulders is a big deal, because ordinarily, at a minimum, you're going to decline this much from the break in the neckline.
And that's a bearish example, right?
That's a head and shoulders topping pattern.
Yeah. There's a bullish version of this, right?
There's a head and shoulders bottom. Absolutely. We don't have to talk about that right now because we are not there. So that's what a head and shoulders topping pattern looks like. So why are we talking about that today? This is a daily chart of the S&P 500. Okay. We had this big run up to this peak in October or November. We had a pullback to the October high, right? It found support there. It was also the same level of where it gapped up through on election day. Price continues higher, right? So we got a new all-time high. Rolled over to the same level that it was at on that pullback. And then started rallying again. So now you're watching, and you're like, it's a potential head and shoulders pattern. Rallies up, gets just about the same level as the left shoulder, and rolls over. Now you really have a potential head and shoulders pattern on your hands, right? It came down, hit support at the neckline once, twice, 3 times, and then broke out on support. That was last Friday. Was that green candle right there. Monday was this day. Gapped up, right? Closed, I don't know, whatever it was for the day, but pretty significantly up, like 1% or something. And then Tuesday, Wednesday, Friday, completely rolled over and collapsed. So where we are right now is virtually right on the lower edge of the neckline. We are right at this like support shelf right there. We're right on it. So if you're trying to make a decision on a daily basis, it's a hard decision to make, right? You are right on that support level, and so either just like here, it breaks up. If it breaks up on Monday and keeps going, That's entirely possible, right? It would be a failed head and shoulders because the head and shoulders isn't really executed until we get below the neckline. And it's not an exact science, right? It's just not an exact science. So head and shoulders critically important. If it fails, meaning we don't get below the neckline, then it's just a continued, sideways. What do you call it? What's the term? Sideways.
You just messed me up by asking me. I say it 3 times a day.
I know. I can never remember. So it can do like this, right? It's a trending market, whatever you call it. So if this fails, meaning it doesn't break through that neckline and go down, it keeps going sideways until it decides which way it's going to go. So don't get too hung up on the head and shoulders. It's important to see it, but it doesn't mean that the market's going to roll over here. Okay. So as you can see, it's very, very similar to the textbook head and shoulders, and so it's important to watch.
Range bound.
Excellent. I don't know why I can't remember that either.
You started saying everything I could, and I was like, "Oh, you're messing me up." Yeah, range bound. It's a range bound market, which is, on that point. So keep that chart in your mind. I'll put it back up for a second. As that continues to the right, that's what a range bound market looks like.
Yeah.
And it's a sideways movement, but it doesn't have to look exactly sideways. It just means it's kind of in a range, and it can't get out of it. And so that volatility, particularly in the TSP, when you can only move twice a month and you can only do it before noon and all the restrictions, a range bound market is absolutely disastrous because you can't do much with that. Because if you think it's going to do something, you have no proof because it's not really in an upward or downward trend.
Yeah.
And so wherever you're at, if you're in, you stay in. If you're out, you stay out and wait for that range. Now, that's different if you're in a brokerage account, an IRA, or something else, because you can do other things. I'm talking about in the TSP. If you're range bound, you're stuck. And once you definitely know you're range bound, you really are stuck because you're not going to get it right either way.
You might guess right.
You might guess, absolutely. And we can always guess right, but you won't know until the trend actually changes. What happens is it breaks out of that range, either up or down. Yep. Just like Jerry's talking about with the head and shoulders pattern, it will break through and you'll know, oh, that was a head and shoulders. At this point, I put my money on a range bound market just because of what you're seeing there in that chart. I mean, the head and shoulders is starting to become a head and 3 arms or whatever.
Sure, yeah.
You know what I mean? It's like at some point the shoulder, it's an arm and there's another arm.
Yeah, and a leg.
Okay, we're gone.
Yeah.
That's a range bound market, and so those are very difficult to predict or respond. We always attempt to respond to the market, not predict. But either one you're doing. If you're predicting, you're trying to do the gambling mentality, or you're responding. Range bound market is rough. It's specifically in the TSP because you just don't have a lot of options. Because if you get out, you got to sit on the sidelines and wait. If you're in, you've got to stomach the up and downs. For those of us that are in, you got to stomach the up and down until it breaks this range. Mm-hmm. And then you can make a decision because, all things considered, all the response there in that scenario was to, it broke out but then it didn't.
And rolled right back over. Yeah.
So, you got to respond to what the market does. And if you're in, the response is wait it out. Because it's not really going down or up. It's going sideways right now.
Right. The problem.
Right this minute, it's going down.
Yeah. I mean, so somebody put up in the forum, in the member only forum, like, I can't even remember. There's a couple of questions in there about it, and the bottom line, and we're going to get to it in another chart in a minute, but this is a short-term trend. This is a daily chart we're looking at, right? So. The trend, the longer term trend is up.
Yeah,
it's been up.
I was going to say when we get to the end and you look at the weekly chart, which is what we use at the end of the podcast, I want you to remember this. Go back and
you're going to see it again.
Are you going to put them together? Okay, because that is very important.
Yeah,
I have to do that for myself all the time. It's better to zoom out for a second and go put it in perspective and go, okay, all things considered, we are still in a bull market.
Yep.
If you zoom in, we're in a range-bound market, potentially a bull market. But that's on a daily basis in a very short window. You cannot play this game looking like this. You have to do this, right? I'm going to fall over. My chair's not ready for that. You got to pull back and then come back in. And now you've got some perspective and you say to yourself, okay, all things considered, we're in a bull market. With that understood, on a daily basis, we're looking like we're going range bound, but it's okay. It's still safe because we're not in a bull market. If we were in a bull market going down,
In a bear market, yeah.
I'm sorry, but yeah, bear market going down, maybe a different scenario. But in the scenario that we're in right now, and I know you're going to talk about it at the end, so I won't beat it to death. But it's very important, folks, to think about that when we get there.
Yeah. And if you're a subscriber and you absolutely should read the newsletter this weekend, because
you should read it every weekend. But
yeah, I mean this is I'm almost done with it. It's Saturday morning, so by the time you hear this, the newsletter will also be coming out at the same time. But it's giving you as good analysis as you're going to get to what to do, both on a weekly and a daily basis going forward for all 4 of the TSP funds. Okay, so Bitcoin. Why would I do Bitcoin following that head and shoulders pattern on the C fund? Because Bitcoin is giving us the exact same pattern, and it's not the only. I could have picked Palantir, and I think Palantir is a lot of different companies right now that are putting in head and shoulders patterns, and if they break, it's just not going to be good. So same kind of thing in Bitcoin, right? We had this monster run up from 67,000 to 100,000, right? Market went straight up. Huge move. Pulled back, and when it pulled back to this. We had a whole bunch of resistance here at about 90, right? Broke through that level, came up for the first time, it hit 100 right there, 100,000, pulled back to 90. Makes its way up to the top of the head at 108, and then pulls back to 90 again. Came up again a little bit higher than the left shoulder, but rolled over again to 90, right? This is as of Saturday morning. So on Friday, it hit it and bounced a little bit. Saturday it kind of hasn't moved very much, but it's got to stay above that neckline. And it's in the same kind of range-bound market right now. And if we get Bitcoin down here below 90,000, you're talking about 78,000. This, distance from the neckline to the top of the head, from the neckline down to where it would go, roughly 78,000 maybe, just from this one type of analysis. So head and shoulders, really, really important pattern to be able to pick up as you're looking through charts. Okay, TSP fund charts. So like we talked about, we always do the weekly charts on the show, right? This is a weekly chart, so each one of these is 1 week of price movement, right? Green or red. This is the 20-week moving average line, and this is a relative strength indicator, is the tool that we're going to use on the chart, okay? This is the same neckline. I just brought it over to the weekly chart. So we've been in this uptrend for a long time, and I don't even go back. Yeah, I do go back. So since we got back above it, above the 50 RSI line and the 20-week moving average line, we have not closed below the 20-week moving average line since November of 2023. This right here was a really tough week, right? A green candle means the market opened at the bottom of the rectangle. It got as low as the bottom of that wick during the week. It closed at the top of the rectangle. So it closed the week above that 20-week moving average line. So even though it looks like, it's a big outlier, on a weekly basis, it never got a weekly close below that 20-week moving average line. So we are right on it right now. Right? It's the price is 58.27. The 20-week is 58.26. we are right on the 20-week moving average line. And we are right on this previous high and the neckline. I mean, if it doesn't find support there, those are huge support levels. If it's going to find support there, it's going to go to new highs, just like it did here and here. And you can keep going back and looking at it. That's what happens. It comes down to the 20-week, finds support, and keeps on moving. Is it going to do that this time? I do not have a crystal ball. I have no idea. The best you can do is to see where we are. We are right on the support level. So if you want to throw in the towel and say, well, I've had enough, the market's down 2% this week or whatever it is, I'm getting out, that's fine. If you do that and the market gets support there at the expected support level, you won't be in that move up. Maybe you give it another day. Maybe you give it another week, since this is a weekly chart. Maybe you want to see a weekly candle down here somewhere. If that's what you want to do, you have to be willing to accept another loss to that much, right? But then the likelihood is that it keeps going down, so you're in a good place.
Yeah, but let's put that in perspective. That's a very low amount of risk.
Yep.
Even though you're talking 2%, 5%, right? Yep. That's not 10, 20, 30%, right? So if that drops below that line, you're looking at potential significant losses, and you avoided those, even on a weekly basis. This has to sink in. If you guys are watching this show, I don't know why else you'd be watching it, other than to get these things, these kind of concepts through and understand that you have to pick a day to make the decision. Looking at it on a weekly basis is probably the most reasonable thing to do for the TSP. And that will keep you from having catastrophic losses.
Not all losses.
Right. But catastrophic, meaning losing 30% of your retirement, which is what, that's really what we focus on, and anyone should focus on who's in a, we're talking about the retirement account. And any financial planner that would tell you different, I don't believe that's true. I think most financial planners I know would agree with that statement. You do the best you can to be in a position where there is not a risk of catastrophic loss of your retirement account. Yep. That's it. And so all that other stuff, but my buddy got 22% and I only got 19% for the year. What? What? Yeah. Are you kidding me? Yeah. Pat your buddy on the back, pat yourself on the back, and move on. You had a great year. And what you didn't do, and hopefully you don't do if this happens, if we're looking at this chart, and that does happen and it goes below that support line, is, you see it and you get out and you don't take those losses. Yeah. That's the point. Yep. So we'll keep moving.
Yeah. You guys got the idea.
Yep. We'll watch the market.
S fund, also in a critical place, right? It doesn't have the head and shoulders pattern, but it's the same. We had the same high in October of last year, the big move higher during election week, new highs, and then came down and tested the same breakout level and the October high from last year, right? And then we rallied for a couple weeks, and now we're right back to support. At that, we won't call it a neckline because it's not a head and shoulders, but it's the same. It's the same idea. It's the same thing. So, are you going to bail on the S fund at this point? It's just barely below the 20-week, and it's right on where it's hit support. Over the past, month or two, relative strength is falling, but it's not below 50 yet. When relative strength is below 50, right? That's where the market's going down. When it's above 50, the market's going up. So it's not an exact science. It takes some judgment, and that's that. We're trying to educate you guys and give you some ideas of what to look at, what the charts look like, so that you can make some reasoned reallocation decisions based on your personal circumstances and risk tolerance. I mean, if you had $1 million up here and now you got 950,000 down here or whatever, and you're like, that's it, I was planning on using that money to buy my $1 million house out, and I can't take it anymore. That 50 grand loss, I don't know where I'm going to get it from, so I have to get out. Great, get out. You have a reason to get out. Get out. You shouldn't have been in stock funds anyway if you're going to use that money to buy a house. But if you're, I don't know. I'm not gonna say what anybody should do, but you can see what it is. You're right on the support level. Either find support there and goes higher, or it breaks down and goes lower. So if you want to try to guess which way it's going to go, have at it. If you want to see which way it goes and then respond to it, that would be the recommended way. All right. iFund makes it much easier. Okay. We got this breakdown, obvious breakdown, through that 20-week moving average line and got below 50 on RSI, and we've been heading lower ever since. So there are some targets. We're going to talk about targets on the iFund in the newsletter, but the iFund is all about the dollar. If the dollar keeps going higher, the iFund keeps going down. So the dollar is really important. The other one that's probably the most important thing right now is the 10-year treasury yield. And when yield goes up, the price of bonds goes down. And so the F fund is the aggregate bond index. And when the 10-year yield goes up, the F fund goes down. So this was, ironically enough, how did that happen? All right, I'm back. Ironically enough, right here was the September Fed pivot when the Fed started cutting rates. So the Fed starts cutting rates, and immediately the bond market says, nah, we're not going to play along. So the Fed only controls the amount, the rate that banks charge each other for overnight lending. That's what the Fed funds rate is. But ordinarily, the bond market follows along with the Fed. In this case, the bond market is not following along with the Fed. The Fed is cutting rates, but the bond market is raising rates. And so when the bond market raises rates, the price of the F fund goes down. So obviously, that's the fundamentals behind it, but it's pretty clear that we're in a downtrend. Relative strength is in a downtrend. Price is in a downtrend. The F fund is no good for us right now if the stock funds tank. That's it.
Questions. If you have questions, as usual, you can send them to us in the comments section wherever you found the video. If there's no comment section, shoot us an email.
Yep.
support@growmytsp.com. The support team will get it over to us, and we'll do our best to answer it. I hope you guys are enjoying the show. If you are, please share it with your friends. Hit the like, subscribe.
Do all the things.
All the things, man. Please.
The algorithm helps. Yeah.
You guys have a great week, and we will see you soon.
Out of here.